Hello everyone, Mike Arnold here, co-founder of Path Trading Partners along Bob with Iachino. So, this is actually a really good lesson we'll talk about today. So we're watching a trend line. This is a path trend line. If you viewed our video yesterday, if you want to learn more about it, then we have a whole section of videos on how we draw them. Now, we wait for the close, which means also we miss some good entries, but it also eliminates some false entries. So if you were just going on, let's say, price action above this trend line, this would have triggered you in. If you're waiting for the close like we do, this would not trigger you in. Why? It gapped up and then closed down. It's a red candle. We do not, for a long, take an entry on a red candle. We need a green candle. So would this be our rotation up? No, because if you followed our trendline videos, we would do a redraw. Okay, and that would be the redraw, and then we'd watch for the break of it next week. So that's how we would do it. So I'm going to leave it like that. Now, let me take it back here. If you're just looking for intraday price action and anything above this trend line, then this would be a rotation entry. Or if you didn't do it on this because of a red candle, or you waited and then you're saying, oh, it's pulling back, because this is a concept of kissing the trend line goodbye, this one would have rotated you back up and you would have taken that one. We did a redraw. If you want to know how to do redraws and when we do it, then go please see our trend line video. All right, 4-hour chart for next week. Key support now coming in at 880. If we drop below 880, we're then going to be watching minor support at 861 and major support at 826 based off the 4-hour chart. Above this trend line, again, if we rotate up and close above it, that's a really nice rotation entry back up with a path trend line. Going to the daily, let's see where key support is on the daily. 851, so you could literally, where were we on the 4-hour? Sorry about that, 851, so that would be right down here. And we were talking 861. Just combining, this is a way we do multi-time frame analysis. So I would sort of ignore that 861 level and just bump it down to about 851 for the key level support, or you can lose a support window, which would be 851 to 861. So if we came down and made a bottoming pattern in there and started rotating back up, that's where we're looking with the confluence of the time frames. Dropping below that 851, next area of major support is this 808 area. Let's say about 803 to 808, and then major support now coming in at 755 based off the daily chart. You can see over the last 3 days diminishing volume and very tight ranges, starting to coil up, waiting for the next breakout. Since it's the end of the week, let's do end of week wrap up. So again, lower volume than last week. Actually, this is the lowest volume back since the last week of December. So we have waning volume, inside bar from 2 weeks ago still. So this 2 weeks, this key high and this key low from 2 weeks ago are still the major breakout ranges. And if you notice, the weekly rotation zone's right at this open/low. So key support on the weekly is all the way down at 542. So on a big drop, 542 is the first level of key support. To the upside, if we get above this 967, I'll just review the levels again. 1004, so essentially 1000, 1039, 1067, and 1129 are all the key levels to the upside. Hope everyone had a great week, and we'll talk to you later. Bye for now.